We have to make it 4 more weeks till Nvidia's earnings, May 22nd. That's a long time to speculate. We're going to be tired of speculating. But it amazes me that as long as Nvidia has dominated, it's been a good run. They come out with new chips.
It has.
There's no one else out there trying to work on customer substitution efforts for Nvidia. And everyone's, the stock's $100 off its high, so it's not like there hasn't been some profit taking, but are they just going to run away with this and no one's ever going to catch them?
I mean, they are maintaining the pole position. It's hard to play catch up. You have AMD trying to play catch up, and you had Alphabet talking about uses there, or excuse me, Microsoft talking about using AMD chips as well. But AMD has continued to be a distant second in terms of that space. The stock is gaining a little bit of steam today, but nothing compared to, say, Nvidia. It is up 2.8% at the moment. So you're seeing some sympathy movement there. And yes, it is the kind of second in position. But when you think about a Usain Bolt, I don't know who's the second after you. We don't even know the name of the person who's second after Usain Bolt. Nvidia is exactly. Nvidia is the Usain Bolt here, so it just continues to maintain its leadership in this space. It's got a long time. Others have to seriously play catch up if they want to even try to come close to Nvidia.
Yeah, everybody expecting another blowout quarter as far as sales goes, just from some of these numbers from these mega cap tech names.
And Jim, you press the buy button on Nvidia. We're not going to hear from them for a little while, but nice price action today, up 5%.
Well, yeah, I mean, we got a meaningful pullback over the last few weeks, and it's found its footing. It's going higher. I continue to think that the valuation on this name is actually quite inexpensive. And I know that at mid-30s, some people may look aghast at that, but just remember the earnings growth that you're looking at for the next few quarters is likely to be well above 30%. Folks, that won't last forever, but it is for the next few quarters. So I'm comfortable adding it here. I'm not, Courtney, just for the record, I'm not adding big positions here because I do think this market overall is going to be choppy. I think we're still adjusting to higher interest rates, but I do think from here to year end, we're going to look back at this price target or this price level on Nvidia and feel it was a very good entry point.
At the time of this video, Nvidia stock is trading at about $877 per share, and it's also now trending upwards after dropping 10% from its 2024 high of $950 that it reached in March. Following the stock's recent rally, the investment banking giant Morgan Stanley has doubled down on Nvidia stock, attributing this move to the expected growth in the adoption and utilization of AI. In today's video, we're taking a detailed approach to explore the case of Nvidia and Morgan Stanley's bullish outlook on the stock. We're also going to address some recent fears surrounding Nvidia, particularly based on the performance of partners like SMCI. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
We're going to discuss Nvidia. Is this going to be the big winner after those announcements from Meta Platforms, Google, Alphabet, Microsoft? The CapEx spend is just astronomical into the AI space. It seems like a race at this point. Let's bring in senior markets correspondent Diane King Hall to have a discussion. Diane, the stock's up 75%. And it seems to be it hasn't even reported earnings, and it seems to be the beneficiary of all this spending, right?
Absolutely. And you made a comment earlier. Actually, I'm not sure if it was you or Kevin who talked about the breadth today. And the breadth might not be wide. And while the scope is narrow, it has been accretive to Nvidia today, especially when you think about that CapEx spend from companies like Meta, like Alphabet, Google, like Microsoft even, is helping to fuel this run in Nvidia today. That stock right now up about 5%, not quite at its highs, but at its highs of the day, but close to it, right? And it's above that threshold level, that milestone level you talked about, above 850 now in terms of where it's trading. So what happened here? There was a lot of talk about this AI spend and how beneficial this is to Nvidia on these earnings calls from Google, from Microsoft. So Alphabet, Google parent company Alphabet, Alphabet talked about this. You had CFO Ruth Porat talking about this on their earnings calls, the use of Nvidia chips. You're looking at Jensen Huang there. But both of them saying, although they're using in-house chips, they are also using these chips from Nvidia. Alphabet CEO Sundar Pichai said, we offer, quote, an industry-leading portfolio of Nvidia GPUs. They also mentioned their own units as well. But again, the highlight to Nvidia. Microsoft talked about it on its earnings call. CEO Satya Nadella said, quote, we offer the most diverse selection of AI accelerators, including the latest from Nvidia. We mentioned AMD as well. But again, we know, they talked about their own chips as well, but we know that Nvidia has been and continues to be the leader in this AI space, and especially when you talk about this CapEx spend. Alphabet saying its CapEx spend was $12 billion. Ruth Porat talking about it in its latest quarter and the continued investment in that. In recent quarters, they said, Ruth Porat said, quote, the significant year-on-year growth in CapEx in recent quarters reflects our confidence in the opportunities offered by AI across our businesses. So it shows no sign of letting up in terms of the spend that is allocated there. And who is the biggest beneficiary of that? The leader, Nvidia.
This was an exciting month for tech investors, with many big tech names, including some of the Magnificent Seven, reporting stellar earnings. Thanks to this, Nvidia stock saw a boost, since this company provides the chips necessary for every other big tech name to develop their AI technologies. So it's only natural that Morgan Stanley is now doubling down on Nvidia stock after the recent dip. The prominent financial institution just increased its bet on Nvidia, seizing on the opportunity to acquire more of the AI leader's shares. Notably, Morgan Stanley currently maintains an overweight rating and $1,000 price target on Nvidia stock, which is a 14% upside from where the stock is currently trading. So, why is Morgan Stanley so bullish on Nvidia? And should investors follow suit and load up on more shares? Let's find out. Hello everyone, and welcome back to Investocracy.
It's time for FOMO, and there is no better name to discuss for FOMO than naturally Nvidia, as shares are up now 78% on the year. They've pulled back, of course, but hey, making a 6.5% move today, not too shabby. So here to tell us more what's driving some of this momentum, I'd like to welcome in Diane King-Hall, senior markets correspondent for the network. So thank you so much for being here today, Diane. Happy Friday. It's a good Friday to talk about Nvidia because we're rallying.
Right? It's a good Friday for Nvidia, for Supermicro. Any of these companies that are at the forefront of this AI arms race are gaining ground today. And any companies that even have exposure to this growth in AI, especially this generative AI space, when we talk about the, whether it's the chips or the picks and shovels in this space, you're looking at Nvidia. It is higher today by 6.5%, so it's even higher than the last time I talked about Nvidia. Though it's not at its all-time high, it's gradually moving closer and closer to that. I mean, once upon a time at its 52-week high, it was trading above, well above $900 a share. And again, this is in front of its earnings. Its earnings haven't even come out yet. We're weeks away from its earnings. What's driving this? This is this CapEx spin that we're hearing about from these mega cap tech names like a Meta, like a Google parent company Alphabet, like Microsoft. All of them talked about this on their earnings calls, right? The CEOs of each of these companies talked about buying the chips from Nvidia, so that is just fueling the momentum in this stock today. And even though they have their own chips that they're making, both companies, in particular, Google parent company Alphabet and Microsoft CEO, talked about the CapEx spend on AI and the continuation of that spending there. And of course, we don't want to forget about Supermicro. They've got partnerships with these chip makers, including the leader, Nvidia, AMD. You're also seeing AMD gain some ground today. Supermicro up about 9% at the moment. So it's certainly gaining some ground on the back of this AI boom. Jenny and Alex?
Diane, when you look at this stock, I mean, it's swinging around hundreds of billions of dollars a day. If you look at the S&P 500 yesterday, its rally, it was responsible for 10% of it. It's just so important to the market. Do you get that feeling? I mean, you're on the floor, you're talking to people, whether it's on air or just in passing. Is it to the point now where if you get Nvidia right, you can largely almost tell where the market's going?
Well, that's the leadership here, exactly. What we're hearing in terms of the analyst commentary on it is it's really these mega names like at Nvidia that are carrying the S&P 500, that are carrying this market. We've constantly talked about a little bit of a broadening out, but again, the leadership rests with companies like this. And I don't want to forget about Supermicro because we know they have their earnings next week. They report next. Supermicro reports next Tuesday. In terms of its growth, it was enough for it to gain a position in the S&P 500 this year. You'll recall it entered the S&P 500 earlier this year. Now, in terms of what expectations are for Supermicro, analysts expecting it to report that revenue will jump more than 200% to nearly $4 billion. EPS expected to hit $5.84 a share. Again, that's a huge jump from what it was same time a year ago. A company like Micro is trying to keep up with this demand for AI, the servers that it produces. It is AI-focused server business in partnership with Nvidia, with AMD, even Intel, although Intel is certainly not participating in this ride higher that we're seeing in terms of the AI-focused companies. Intel is really the laggard when we look at that.
Wall Street is highly bullish on Nvidia stock, with many analysts giving it a buy rating. Only a few stocks can boast such positive sentiment, but Nvidia has demonstrated the type of growth that's hard not to marvel at. Not only that, but Nvidia's growth often rubs off on its partners. For instance, there's SMCI, Nvidia's long-standing partner. Nvidia and Supermicro are tightly linked. In fact, the company's CEO, Charles Liang, noted that as long as demand for Nvidia chips remains strong, SMCI will continue to be a high-flying company. But Nvidia investors know that while the company's partnership with Supermicro is very beneficial, since many of its offerings depend on Nvidia's chips, it also comes with a few downsides. For example, very few companies regularly pre-announce upbeat results before their official earnings reporting date, but Supermicro did that in January, and this move proved to be successful, sending the company's stock up by around 11%. However, this time around, SMCI failed to deliver another upside surprise, and this sent the stock price down almost 23%, especially as the company is set to release its quarterly results on April 30th. According to Mizuho analyst Jordan Klein, expectations were that SMCI would positively pre-announce results like they did in January, especially since the company's shares had increased almost 150% in 2024, leaving zero room for error. He also talked about how SMCI's failure to pre-announce its results raises questions about the overall strength of the quarter. Not only that, but it has started a waiting game where investors have to wait until the company gives a report, which will consequently be used to guide the next quarter. Now, this negative sentiment on SMCI has, in a way, affected Nvidia. The chipmaker's shares recently fell 10% after Supermicro broke from its recent pattern of providing preliminary results. This event marked the worst day for Nvidia since March of 2020 when the pandemic was soaring, and Nvidia's market cap ended up going down from around $2.3 trillion to $1.9 trillion, even though it recently recovered and went back to the $2 trillion mark. So, Nvidia's partnerships are something Nvidia investors should pay attention to before making any investment decision. For instance, great earnings from partners, like we've seen, could boost the stock, while bad earnings could cause it to fall, but this could be a potential buying opportunity for investors. So, it's very likely that Nvidia will continue leading the AI chip sector in the future, and you can't really freak out about the competition if you're an Nvidia investor. In fact, Bloomberg Technology recently reported that Nvidia's AI accelerators are expected to generate almost $50 billion, whilst competitors like AMD and Intel will only receive a minimal portion, coming at $3.5 billion and $500 million, respectively. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yeah, I think it's a good point. I mean, Intel has fumbled the ball. I mean, clearly they've had an opportunity basically handed to them on a silver platter, and they can't seem to do anything properly at the moment. But in the case of Nvidia, I mean, I see 61 buys, 7 holds. I know not every one of these is up to date. At this point, if you're in the neutral camp, like to me, you're stepping out on a ledge. That's the sell rating in an Nvidia. And I love the conversation around SMCI. I think it's a good story. But NVIDIA today, this $55 rally is almost 3 SMCIs. Like, it's just different levels here.
It's true.
When you hear, like Edgewater Research, I see just came out with a couple days ago a neutral rating on NVIDIA. Is it almost like a shock? Is it like a headline grabber where you're like, what do you mean you're neutral on this stock? I mean, you're stepping on the ledge. You're unique if you make that call.
Well, you saw my reaction when you said that. I was like, what? That doesn't make sense. I mean, and I don't know if it's just a going against the grain kind of thing, because when you think about all the conversations about what we have, about where we are in the development of generative AI, we constantly hear that we are still in the early innings. So if we are in the early innings, and if NVIDIA is still the leader and it continues to beat quarter after quarter after quarter, why would you get in front of that moving train?
Nvidia is a company that seeks growth from multiple different sources, including acquisitions and partnerships, which allow it to stay multiple steps ahead of the competition when it comes to new technologies. Recently, Nvidia announced that it's acquiring Run AI, a company that built a Kubernetes-based GPU orchestrator, and while the price is not disclosed, there are reports that it is valued anywhere between $700 million and $1 billion. Run AI's advanced orchestration tools are essential for managing GPU resources more efficiently. This capability is critical as the demand for AI and machine learning solutions continues to rise, requiring more sophisticated management of hardware resources to ensure optimal performance and utilization. Also, by acquiring Run AI, NVIDIA can integrate this technology into its existing suite of AI and machine learning products. This enhances NVIDIA's overall product offerings, allowing for better service to customers who rely on NVIDIA's ecosystem for their AI infrastructure needs. To sum up, this acquisition strategically positions NVIDIA to strengthen its leadership in the AI and machine learning sectors, especially in the context of optimizing GPU utilization for these technologies.
Well, the Magnificent Seven battle heating up as first quarter results bring a fresh insight on AI leaders. Here with the latest is Yahoo Finance's Dan Halley. As one of our guests said earlier, the Magnificent Seven is dead, but I guess there is still some vying for market cap dominance here, Dan.
Yeah, Julia, a lot of moves with the regards to AI in these early earnings that we're seeing. Obviously, Intel, Microsoft, Amazon, Meta, kind of, really leading the way. Google as well in there, and top line discussion for all of them seem to be AI. Obviously, Intel suffering just on the weakness of guidance. Meta suffering as a result of the kind of investments that they have to make to get up to speed and kind of implement AI. But Microsoft and Google seeming to do well on that. It all really is still about AI when it comes to earnings. And it's how much do companies now have to invest, and then how much are they actually getting out of it? So far, we're seeing Microsoft pull out some more earnings or revenue rather than perhaps the competition. They said that they saw 7 percentage points of revenue in their Azure division from AI. So that's 7 additional percentage points as a result of AI. Prior quarter, that was 6%. Prior quarter before that, I believe it was 3 or 4%. And then last year it was 1%. So they're seeing that steady growth. They say the reason why they're not going higher, or why you're seeing kind of that steps shrink is because of capacity. They just don't have the available capacity to meet consumer needs right now. And so they're putting a lot into CapEx. Google as well, ramping up their CapEx, saying that they're hoping to see more AI come around as far as not only the Google Cloud platform, where they're seeing some growth, but also in search. And then Meta, they're going to be investing more in AI, obviously by a large margin. They, though, say that they're seeing growth in AI as far as the use of it when it comes to advertising customers. So being able to put together platforms, advertising platforms very quickly for themselves. And then on the Intel side of things, they're pushing forward. They do believe that they'll start to see some momentum in AI. They have their Gaudi 3 chip coming out, but it just doesn't seem as though they'll catch NVIDIA anytime soon.
And Dan, what are you looking at ahead to next? You know, because I'm looking at the calendar for next week when we've got the likes of AMD, we've got Qualcomm, and of course we've got Apple coming up as well. What are you going to be tuning into when it comes to the next part of the AI conversation?
Yeah, don't forget Amazon either, right? They're also a big AI play. They have their Bedrock platform that's part of AWS. So I'll be looking to see what they have to say about that. And the kind of uptake they're seeing, right? Because all these companies have invested now, and they're continuing to invest in their capex when it comes to these AI capabilities. What is the uptake? Are we starting to see people pick up from there? And so, Microsoft kind of touting that 7% number, cool. Google giving us, some insight into where it's going, cool. But last year was this kind of year in investing. This year seems to be the year of, show me the results. When it comes to AMD, we have on Tuesday as well, where are they seeing sales? Are they seeing improvement when it comes to their servers and their AI offerings? They have that MI300 chip that they say can go toe-to-toe with NVIDIA's H100. And then our PC sales coming back. There's this whole push for the so-called AI PC. Are they seeing improvement there?
Nvidia is big in AI, which is a red-hot field these days and will likely continue to be. AI is used in everything that many people consider the future, from self-driving cars to facial recognition software, and Nvidia's GPUs are well suited for the work that AI requires. This focus on AI could be a key factor in Nvidia's comeback story, and as companies continue to invest in AI, the demand for Nvidia's products will rise, and future earnings reports will be big indicators of how things are going. So, if Nvidia can show strong growth in its AI chips business, which won't be hard, considering that the company is releasing its new Blackwell chips later this year, then the company's stock will very likely see a massive boost soon. Another thing investors should consider before buying Nvidia shares is the broader market. Tech stocks in general have been a bit shaky lately, thanks to various macro, like the Federal Reserve delaying the interest rate cuts, so Nvidia's recent struggles aren't exactly unique. But if the market starts to turn around, that could also lift Nvidia's fortunes. How big do you think Nvidia can grow with the recent surge in AI adoption? Let us know your thoughts in the comment section. If you would like to know more latest updates about Nvidia and what it's been up to, then go ahead and click on the next video on your screen. See you there.